This is Lecture 3.1. This is Journals, Source Documents, and Recording Entries in a Journal. This is found on page 56 of your book. I would suggest make sure that you've really read this section before that you watch this lecture. So if you have not read the section, please pause the video now and come back when you're done reading. Okay. Now that you're done reading, you know that a form for recording transactions in chronological order is a journal, and this is a general journal. Recording transactions in a journal is called journalizing. A journal with two amount columns called which entries can be recorded, your debit and your credit columns, this is called a general journal. Okay. Again, we do this in chronological order, meaning starting now and going further in time. Okay, this is what your general journal looks like. So you'll have your date, the account title, so the accounts that are being affected. Okay, we will talk about your doc number and your post reference number later. Here's your debit column and your credit column. Okay, this is a check. Things that you need to know about a check. This is from your company. Okay, so Techno Consulting writes a check. Here they wrote a check to Port City Supply on August 3rd for $275. Kim Park is our owner. She has signed the check. This is called our check stub. Every time we write a check, we also need to record it in here so that once the check is gone and we've ripped it off here and given it, sent it out to Port City Supply, that we have record of writing that check. So this is check number one. Check number one, these should match. The amount's $275. $275. The date is August 3rd, to Port City Supply, okay, for supplies. The balance brought forward is what was in the checkbook before. Apparently we had not written any checks, so there was nothing in the checkbook before. On 8/1, we deposited money into our account. We must have deposited $5,000. So we had nothing being brought forward. $5,000 is our subtotal. Now the amount of this check is $275. So our balance carried forward to our next check stub is $47.25 even. Okay. A sales invoice. And what we're talking about right now, I guess I didn't even completely tell you, are source documents. So a business paper form which information is obtained in a journal entry is called a source document. So if I go back to my check, in our general journal, when we are doing this doc number right here, if we were writing a check, it would be C for check, and then whatever the check number is, 1. So C1 would have been check. This would be a sales invoice, so it would be SI1 or SI27 or whatever the sales invoice number is. So a sales invoice is an invoice used as a source document for recording a sale on account. A sales invoice is also referred to as a sales ticket or a sales slip. So this is just telling that we have sold a service or a product or whatever to Oakdale School. Here's their address on 8/12. They have 30 days to pay off their account with us. So computer network setup, we set up their computer network for $350. So they have 30 days from August 12th of the current year. Those two little lines just mean the current year so that this doesn't get outdated as we use this book. So they have 30 days to pay off $350. So this would be SI1 in a source document. Okay. Other source documents, we might have a receipt, a memorandum, which is just a piece of paper where you just write a little note about what happened, or a calculator tape. So when you are in your business and you're making a bunch of sales, and so people come in and you write, you type into the register what's happening. Register prints out a receipt for the customer, but it also keeps what's called a calculator tape on the other side, so that when you run this, it has every transaction that's happened during the day. So like this person spent $150, $35, $110, and their total was $295. Okay, so those are your other three source documents. So this would be R1, M1, and CT, or look here, right here, T12. It will tell you right on there. Okay, so calculator tape T12. Okay, so now we need to look at what it's like to journal. Received cash from an owner as an investment. We already know what would happen to our T accounts. If you don't remember what would happen, then you need to go ask those 4 questions again. What 2 accounts are affected? Cash and Kim Park Capital. How are they classified? This is an asset, so this would be your normal balance. This is a credit, so this would be your normal balance. 5,000 would go on the debit side because your cash would increase, your capital would increase, so your 5,000 would go on your credit side here. So once you have that done in your head, if it's easier for you to keep writing those down, just jot those down somewhere so you make sure you're not screwing this part up. After a while, you won't even need to think about this anymore because it will be so natural to you, okay? But you'll write the date in the date column, so August 1st, okay? Our debit always, always, always goes first no matter what, okay? So whatever account's being debited goes first. So our cash was debited, so we'll write cash in our account title, and we'll write $5,000, okay? Then we need to go write our Kim Park Capital. If you were doing this on paper, you would indent a little bit your second account. Aptly, will do it for you. It will indent it for you, but $5,000 goes on our credit side. Now, this says that they gave us receipt number 1. That's what's showing us that we received cash from an owner as an investment. So R1 needs to go in the doc number. For right now, we will leave this post reference column blank until we learn how to post in quite a few chapters. Okay? So next, paid cash for supplies. Again, ask yourself those 4 questions if you need to. What to account, supplies and cash, their asset accounts. My cash side would go down because I'm paying cash. My supplies account would increase, so you'd have a supply debit and a cash credit. So on August 3rd, now if you've already written August at the top, you only write the month on the first line of the journal page. Then you just go ahead and write the day. So on the 3rd, we paid cash. Our supplies are debited, so that's going to go first. Supplies, $275 debit, cash, $275 credit, and they told us that check number 1 was why we know that we paid cash for supplies. So C1 goes in the stock number. Whoops. Oh my goodness. Okay, terms to review: journal, journalizing, entry, general journal, double entry accounting, source document, check, invoice, sales invoice, receipt, and memorandum. The only thing I didn't really talk about as much is this double entry accounting. All that is the recording of debit and credit parts of a transaction. In double entry accounting, each transaction affects at least 2 accounts. Both the debit and the credit parts are recorded, reflecting the dual effect of each transaction on the business records. Double entry accounting assures that debits and credits equal. So when you look at this, you are doing both your debit and your credit, those equal, and you can make sure that your accounting equation is in balance.